On today's episode, we look at borrowing money for your developments. This is Aidan Rees-Heron and you're watching Property Geek TV episode 27. So it's been a very busy week and we've got 5 or 6 things where I expected them all to come together at different times, all starting to come together all at once. So quite busy but exciting. There's a lot going on this year and 2016 is going to be a big year. I've also just hired a new image editor and a video editor, so hey Leo, and had a brilliant time last night at Northampton PPN. So Leo, maybe we can get a couple of pictures to go up. Ready? So that was a brilliant event with Lloyd and Andy. I've got another event tomorrow morning, so there's a lot going on. Expecting some live video sessions and broadcasts coming up in the next couple of months. So very, very busy. But I'm here to provide value to you. So this is very, very serious, okay? I need more questions. I need more questions for this box. Okay, I want it like overflowing. Can you get it overflowing with questions and stuff? Okay, I need them. I also need your feedback. Please comment on these videos, like them, share them, but most importantly, comment. Okay, I want to know what your feedback is on these episodes so I can make sure I'm providing as much value as possible to you on your property investment journey. So with all that in mind, and Leo probably not black and white because I'm not messing around, let's get on with the show, okay? High returns with no risk. High returns with no risk. So, if you're asking, can you get high returns with no risk? Then the answer is probably not. It depends what your definition of high returns are and what your definition of risk is. But typically, the higher the returns become in the shorter the space of time, the more increased the risk is. That's why like large developments and things like that sometimes are perceived as riskier. But if you put all your due diligence in and you do your work, then you mitigate the risk. But also, there's some people that say, oh, it's not worth the risk for the returns, but putting your money in the bank is just a waste, in my opinion. No offence to anyone. Well, okay, yeah. Putting your money in the bank is like 0.5%, 1% a year. Even if you just lend it to people, like our private network, if they lend it out, they could be getting like 1% a month on certain projects that we're involved in. So I know what I'd rather do, and that's really low risk. Obviously the more returns, the higher the risk is. So it really depends on you and what your perception of risk is and what your perception of high returns are, and how much you trust the people that you're doing business with, how much knowledge they've got and experience they've got will reduce that risk load and the chances of failure within the project, whatever it is. But without more information, I can't help you too much more. But high returns with no risk, not really. Not in my experience. Do I need to be regulated to borrow money? This is an interesting question, and any IFAs that are watching this, if you can chip in below with your input, that would be much appreciated. I know a lot of you that are watching this have borrowed money for projects in the past, so the simple answer is no, but the more correct answer is it depends. So it depends whether, okay, so you've got an investor, right? You've got a project, okay? You've got a project over here, and it's a really good project, but you don't have the capital to do it. So you go over and you meet Mr. Investor. Okay, and you say, Mr. Investor, or Mrs. Investor, got to be politically correct, how would you like to be involved in this project? You know, you put the money in, and then you get more money out. It's better than leaving it in the bank. What do you say? And now, if the investor decides to go ahead, there's a few things that you have to question, okay? Are they a sophisticated investor? Are they high net worth? If they are, then you can you can offer variable returns and full partnerships and joint ventures, things like that. If they're not high net worth or sophisticated, the rules and regulations are really dull and boring, in my opinion. If you want to be sent to sleep, then please read those, but it's also important to read them. So if they are high net worth, if they're not high net worth or sophisticated, then you can only offer a guaranteed return, and it's like a personal loan. And so that's like, oh, Mr. Investor, maybe they're family, friends, okay? Oh, investor, if you put your money in, we'll give you 0.5% a month. How does that sound? Now, 0.5% a month versus the 0.5% a year in the bank, ching! That's what the investor's thinking. And then you get the capital, you put it into your project, okay, you develop your project and it's lovely, and then you sell it or hold it or refinance it, whatever it is, but you've got this lovely project, you've paid the investor back, you've made a lot of money in the process, and everything's brilliant. I got a little bit sidetracked there, but basically no, you don't need to be regulated, but to borrow large sums of money or do it on a large volume, then yes, you probably do. And having FCA regulation also is a stamp of approval from the FCA basically, and it also opens up gateways to big sums of money, because people just see it as a stamp of trustworthiness. So there are legislations and things that you have to check off and make sure you've got, and you've got copies of, if you want to get investors involved in your projects. But no, you don't need to be regulated. Cool. I think that was a really succinct episode. And Leo, thank you very much for editing that. Everyone, you're going to get to know Leo a lot better. We're going to get on, I think. And we're going to get to know each other pretty well. I'm looking forward to some of his work, and I'm hammering stuff on Snapchat and on Instagram. So if you want to follow me on Snapchat and Instagram. That is where it's at the moment. Really enjoying being on those platforms, and it gives you all a sneak peek behind what we're up to here. Question of the day. What percentage return is a high return for you?